The Committee on Finance and Appropriations will come to order. The clerk will call the roll. Is he here? How about you?
It's not showing. Hey.
Madam Chair, you have a quorum?
Thank you. This morning, we're going to be introducing the committee to our new Secretary of Finance under the Youngkin administration. Stephen, who likes to be called Steve, Cummings, is that designee. In the past, the Secretary of Finance, regardless of party, has provided this committee with accurate and timely information for which we have always been grateful. And I am confident that this administration will do likewise. The Secretary has a distinguished career in domestic and international financial services industry, as well as having a MBA from Columbia University Graduate School of Business and a bachelor degree from Colby College. He and his wife, Karen, have 6 children and 9 grandchildren. You've been very blessed. Mr. Secretary, please come and give the financial report for December.
Thank you very much, Madam Chair. And before I begin, I want to apologize. I am prone to allergies, so explain my congestion to all of you. It is a pleasure to be here with all of you. This is something that I've been looking forward to, and I want to just start with saying to all of you how excited and honored I am to be in this position. Wasn't on my radar a couple months ago, but when I got the call and spoke with my wife, was one of those opportunities in life that you just have to take. And I'm incredibly excited to work with all of you and do the right thing for the Commonwealth and also for the priorities of Governor Youngkin. Before I get going, I just wanted to talk about how I've thought about my arrival here. Thank you for the intro and explanation of my background, and I think everybody's well aware that my background is long on finance and banking and short on public sector. So a very thoughtful plan on how I'm supporting myself to make sure that I can be as productive as possible, as quickly as possible. And we have some familiar faces, I think, who are my deputies that have been incredibly helpful to me. First, as you all know, the famous Charles Kennington, who served your committee for some time and a very important addition to my team and my support. And then June Jennings, who has been Deputy Secretary for 3 Secretaries of Finance, so a lot of experience. Been involved here with more years than she likes to admit, but the combination of the two of those has been very powerful. And also what was announced in the last few days is Aubrey Lane has agreed to serve as an advisor to me, and not just to me, but in general. And he's actually been doing that since day one. I've been talking to him, but it's now official. He's going to serve at a minimum through the session. I want everyone to understand that is an unpaid role. Aubrey has been incredibly generous with his time to make sure that I am getting all the input and guidance that I can. So again, I can be really thoughtful and contribute as much as possible to the discussion. So if we could put up my presentation, and I will try to move through this pretty quickly, get to your Q&A. So my first opportunity to speak with you, and a little bit of a departure. We've added a chapter into this deck, which you've seen, just to do some ground setting of where we are today. And this was helpful for me to get context as I move into this new world. And I know a lot of you are well aware of this because you've seen this money flow, but where we are today, getting everybody to think about what does this mean for the future of our budget. I will say that I'm maybe the most fortunate Secretary of Finance in the history of the Commonwealth to come in with this financial position. That's what everyone is telling me, and It's an incredible opportunity. I'm excited to be part of that. But as we all know, when you're going through those discussions, it does introduce a new set of challenges, is how do we make sure we're very thoughtful with what we do with our surplus, but then also how do we make sure we manage the cost of government going forward when we're in such a position of largesse, and make sure we're going to control how we look at how those resources are deployed. Say that the guiding thought for me is, first and foremost, is that what we've seen is a growing cost of government. Over the last 8 years, GDP has grown 1%. The revenues of the Commonwealth have grown at 8%. And I don't believe that that kind of a metric is one that we should say defines success. It's great, the economic position it has put us in, but that's not, in my mind, what our citizens are asking us to do. With respect to the impact on the citizens of the Commonwealth, I think we all know that the top segment is doing incredibly well in both individual and also in corporates. It's turned out the great fears we had 2 years ago, 2+ years ago, have translated into an incredible situation for the most successful people at the individual and corporate level. The people below in the lower segments of our economy, not so much. And we're going to talk about that today. And I think that's what we need to keep in mind, is how do we make sure that we're reducing costs for people so that we can improve their life, but also make Virginia a more attractive place to do business. This is now looking at what has happened over the last several years. Again, I know you're quite familiar with the big picture on this. This chart shows the GDP impact of all the government programs since the pandemic arrived. And incredibly powerful and swift actions taken. The left chart is the cumulative impact of the 2020 implementations, 5 programs, $3.4 trillion that was implemented. The right side is ARPA, which is in March of 21, $1.9 trillion. And I think, as you all know, 3 rounds of individual rebates, very substantial for the individuals, very helpful. Bolstering unemployment insurance, 2 rounds of PPP, helping small businesses, state and local support, and then, of course, just simple disaster recovery. So very significant and very swift. This next chart shows what was the impact. So you take those impacts on GDP and you kind of say, wow, if this hadn't happened, what would we look like today? And the lines that are drawn, the vertical lines on both of those charts, just as to set the eye of those are the same points in time. On the left chart, we had, as you all know, April of 2020, that quarter was a over 30% decline in GDP, unprecedented. That kind of pace, and the bottom dropping out. What is that saying there? Sorry, what's that pop-up? Can somebody?
It is a technical issue. We'll get that straight for you, sir.
Password. So anyway, I think we can continue. So 30+% decline in that quarter, April to June of 2020, and then perfectly timed with the first round of significant stimulus, and then the ARPA coming into the economy. And as of today, and this is with the impact of Omicron still in the mix, we're within 5 to 10% of what was a pretty well-established GDP growth rate. So pretty impressive how we've gotten back pretty darn close to where we are, and I think that explains a lot of the positive impact that we have on our economy. Now looking into the numbers a bit. Let me start with, if you look at 21 and the composition of revenues, withholding, non-withholding, sales and use, corporate income, I think it's important to look at what are the contributors. So if you think about when things change relative to their contribution to the overall number, what really matters. Individual withholding is 60%, non-withholding is 16%, I'm sorry, is 20%. Sales and use is 16, and corporate is 6. So the important things to keep in mind of what really moves the dial. If you then go to the bottom bubble below the first 3 columns, you can see that 20, although COVID had arrived, really was pretty stable. It was up modestly from fiscal 19, but really saw things bump up in fiscal year 21. Now shifting to the right, on the bubbles on the right, last 2 columns, interestingly, withholding held steady. In fact, in 21, withholding was up 5%. And the individual non-withholding, big bump. That's obviously tied to an unbelievable stock market activity that's driven by capital gains. Sales and use, very solid. Shift to a goods economy from services, so that leads to higher taxes. And a savings rate that was up due to some of the fiscal stimulus. And then corporate income tax up significantly. And that is just a reflection of how strong the corporates have performed through COVID. And I think particularly unique for the Commonwealth is the mix of our corporate income. 1.5% of our corporates, 1,000 corporate names, contribute 84% of our corporate income tax. It's incredible. And that, if you look at the profile of that 1,000 names, very unique versus the rest of the country because of all the business services that are building that. Obviously, government is a part of that. It's a stable anchor tenant, I would call it. But all the things that revolve around that weren't affected truly by the COVID, they transitioned to work from home, and they have actually prospered through all of this. Let me make sure I've covered everything here. Okay. Now, let's look at what's happened in the latest 6 months, which is more of heading towards the topic of today. And what you'll see on the last column to the right, you're familiar with the contribution numbers, is that the top number I think is the most significant. You would all probably say non-withholding significant because it's flattened out. But the reality is that there's about $300 million in fiscal year 21, 6 months, that was ended up in 21 that should have been in 20. And the reason for that is people were given the opportunity to defer tax filings, and a large number assumed they could pay their estimated payment, make their payment in July when they couldn't. And so $300 million went into July that should be there. If you adjusted for that, actually non-withholding was up another 30%. So 14%, which would be probably more 16% if you adjusted for the non-withholding. The reason that 10.3 is so important is that reflects the strength of the top tier of our employees. 22%, or top 22% of our taxpayers. 22% of our taxpayers pay 72% of tax revenue, individual withholding tax revenues. As we all know, that group has been doing fantastically. Wages are strong. The companies they work for that we just talked about have been performing very well. They've been getting paid better, and there's a war for talent, so their compensation is up. That is a sustainable new baseline. This number we've jumped up where historically it's been in that 3 to 5% per year. That's establishing a new baseline, which is going to be a very important number to work off because it's 60% of our tax base. Bear in mind that 14% more when you adjust for non-withholding, that's relative to a forecast that was for 4% year-over-year growth. I think one of the things to bear in mind here also as we look at this is this growth that we're seeing, is particularly in that top line, is really just wage growth. One of the real issues for the Commonwealth is the lack of job growth. If you go back to January of 17, 5 years ago, to now, it was 4.3 million jobs back then. It's 4.3 million jobs in the Commonwealth today. And I think that's a real issue. It goes back to how are we growing our revenues? It's really not off of good organic growth, which is an issue that Governor Youngkin is really focused on within his priorities. We have the lowest participant participation rate for our working group of 63%. It's the lowest as far back as you can track the data. It used to be in that 70-plus range. More recently, it's been in the mid to upper 60s. It's 63%. A lot of people who could be working are not working. What's really important about this is, as you know, one of the priorities of attracting 400,000 jobs to the Commonwealth over the next 4 years, every 40,000 plus jobs that we can create adds another $140 million to our budget with good organic growth. So that plan over the next 4 years is worth about $1.25 billion. Individual non-withholding, we all know there's risk in that number. We all know there's a risk in that number. I understand that back in 13 to 14, there was a budget challenge because of a change in non-withholding, a very sudden change that was not accounted for. And we know there's risk in that because it is inflated, but just to put that into context right now, that's been a big number, a growing number over the last 3 years for obvious reasons with what's happened in the stock market. The pullback, a lot of people were watching last week. We had a defined correction in NASDAQ. We've seen this week, yesterday, and expected for today, another decline. As of yesterday, that decline would take us to where we were last June. But both indices, S&P 500 and NASDAQ last year, were up 20 to 30%. So in the prior 2 years, we're also 20 to 40% in each of those years for both of the indices. So it's something we got to watch. It's a risk, but we're not in that danger zone right now. But want to fully acknowledge that there is a risk that is part of that over the longer term. The other areas, I think we should actually feel very good about where the individuals are based on what I just said. Sales and use, there's been some transition in that, but I don't think a big impact. And corporate income, I think, is just reflected with a strong overall economy, and I feel very good about the solidity of that number. So to reemphasize this, we cannot mistake these growth trends in government revenues with success. It's a good outcome for us to be able to do things. We need to focus on part of the agenda, critical part of the agenda is to focus on how do we create real growth in the Commonwealth. That lack of growth of GDP versus revenues is a real issue we need to close. And we also need to get more people back to work. We need to get more companies coming to our state. Okay, now into some of the charts you're more familiar with. Obviously, we're at a point this year in the recovery where GDP growth is at that 6% range. Very strong. It's coming out of a recovery, obviously. We can't assume that that is indicative of the future. The natural rate that we went back to in that earlier chart is going to be in that plus or minus 2% if we go back to historical trends. And that's what we will migrate to as the stimulus goes through the economy. Employment is tight. Unfilled jobs are rising. The number that's in here of the unemployment rising by 199,000, which was only rising, is actually this week. This claims for unemployment, rising to 207,000. This past week, that rose to 289,000, which is troubling. That's the kind of statistic now that is causing the Fed to rethink some of its plans for intervention with raising rates. On this next page, all of these things are coming in through this with the Federal Reserve. The real issue right now is the concern about inflation. We're finishing up this year now with 7%, whereas it looked like it was at one point transitory. It would move through rather quickly given the stimulus going through. It really is now a much bigger concern, and one of the big issues is supply chain disruption, and China shutting down again. That's going to only lead to an extension of that problem, which what I would argue and others would argue is that probably in our economy especially, but larger corporates are dealing with that because they can pass this through. They're managing that supply chain. we need to be concerned about our smaller corporates into small business. They are the victims of this. They're victims of inflation and wages and attracting labor. That's what we need to focus our resources on, and the programs that are being proposed are designed around those priorities. So this is a more detailed affirmation of what I talked about earlier, growth in total general fund revenue collections. And it really is stunning, the consistency of the growth this year, where we've been at a rolling or cumulative growth rate of 14.1% through December versus a forecast of 4.2%. And this is driven by a number of factors, but most importantly is what's going on now with the withholding. This puts us in a great position that we can afford to do the things that we say that we want to do, that are part of the game day, day one game plan that has been proposed by Governor Youngkin. We have the financial capacity to deliver on those proposals. I want to also, I just add, January will mark the first month where we'll be comparing vaccinated months to vaccinated months. As obviously the penetration rate is low at the beginning, it will grow, but some of these growth rates, barring even without other issues like another wave or things like that, they should start to tamp down as the world does start to reopen on the comparative periods. Withholding, 60% of our budget driven by this. This shows you what's happened in the last 5 months, the 6-month period, in a category which has been pretty stable in that kind of 2 to 5% year over year. Given the concentration of where this is coming from, that 22% contributing 70+% of the tax collections in this category, that's very solid. In my opinion, this is a new level that is reflective of the environment, and going backwards on that through losing jobs is one way, but also is wage cuts is pretty unlikely, certainly in the environment we're in. Non-withholding, one of the big areas of growth that we've seen over the past year. I think I've covered this pretty well. Of what's happened in the stock market ties directly to this. We'll see what happens in January. That's a reflection of some of the year-end activity. I would expect that that's going to be another meaningful jump, given some of the concerns about capital gain tax rates that's been in the air. And you can see in April, May, we're going to have some months that will be tougher comparisons. I'm not worried about this in the near term because we still have so much gain built in the market that, and as people sell, as the markets do get softer, that creates real gains as well. So I think we've got a safe period of time for that to filter, even if the market does get flattened out or get softer. But we need to keep in mind that this is an area that is one to watch. Always bearing in mind it represents, I'll say only, but it's 20% of the gross revenues of the Commonwealth. Refunds, I don't think is really worth spending much time on. But when you look at the individual income tax, that net of those first two lines here, that you can see that that's been a very solid area of growth, very much ahead, very far ahead of what the estimate was for that collective category. And that's going to continue to be a solid and strong contributor. Sales tax, very solid. We all know there's some impact of what came through stimulus and the shift from more of a services economy to a goods economy. But still, the economy is solid. People's savings rates are up, and that should sustain itself as long as the economy stays in a reasonably solid position. Corporate, this is 6% of our total revenues. It also has been an area of consistent growth, and given the fact that that top 1.5% is 84% of total, in the nature of what our top 1.5% looks like, very solid. And I think we can improve this going forward with good action on the real organic growth of growing jobs and getting people off the sidelines who are not working, who should be working, and getting them back engaged. So that's a really important initiative for us to drive the future growth of our revenues in the right way. Two small areas, not really worth spending a lot of time, frankly, in the overall scale of what we're talking about, but they're consistent with the rest other categories that we're seeing solid growth. The recordation, which is a lot about home market. We are seeing some softening in the home market sales, so that will move a bit, but not really something to spend a lot of time on. So this page, I think, is an interesting page to look at because it talks about we are where we are year to date. So what does that mean the rest of the year should look like if we were going to meet the estimate that we have in place? So if you look at this on the second and third columns, that looks at year-to-date trends versus forecast. We're up 14%. If you look at the total line versus 4.2% estimate, we've seen that before, so a 3x, big variance of 9.9. And if you look at column 5, Jan to June required to meet estimate, actually revenues would decline. That isn't going to happen. All right, we have enough insight right now. We're starting to see some of the January numbers that are carryovers from December events. I think that's going to be pleasant news, and there's no indication of any pressure on our revenues going down here over the next several months. So I'm optimistic about what everybody's going to be seeing next month when we come back to you with the revenue update and revenue reforecast. I think I just covered this. January is a very important month with some indicators that'll help us look forward over the upcoming months, and we'll talk about that in much greater detail in February and all collectively talk about what that means for us going forward. So let me close with just a bit of a wrap-up on what I think of as the concerns and some of the opportunities which are important context, I think, as we're in this budgeting process. My number one concern is the mindset of confusing the great revenue and balance sheet position that the Commonwealth is in with success. And I really do believe this, and I think it's a hallmark of Governor Youngkin's position is we're doing great. We've got tons of money in the bank. We have great opportunity to do strategic things with that. But that disparity between growth in government revenues versus the growth of our economy is not where it should be. And so that's the basis of let's return some to our taxpayers, and let's look for opportunities to spend our surplus in the right way, fill the rainy day buckets, take care of some longer term liabilities, and then do some strategic investments to take care of things that have been on the list for some time and some new things that are on the list to look forward and what we can do to stimulate growth. Revenues are solid. I think the outlook is strong for all these categories. We have the capacity to do these things. I know there's a lot of discussion about exactly what those things are, but we have the capacity to deliver the things that are on the day one game plan. We need to take care of that lower end of the lower spectrum of our economy, that on the individual level, the people who are most susceptible to their job certainty, job security, who are victims now of this rising inflation, their real wages are going down, is a real issue for us to focus on, and we can help alleviate that by reducing costs, but also by improving the working opportunities. And then in the corporate world, taking care of the smaller corporates, small businesses, with some of the things that will help them be better positioned to fight the things that are more important for them in their survival and success relative to the picture we might paint of saying, wow, corporates are doing great. I think we all know that's a very different story depending on where you look. So those are concerns. The opportunities obviously are built mostly around this rare financial situation that we're all in. It gives us an incredible, once in a generation opportunity to do some very exciting things. First is make sure we fill the reserves, that we can say to rating agencies, and we can look forward and know we have a lot of shock absorbers that we can rely on in the future. We can return dollars to taxpayers. Very important part of the proposal that is part of the day one game plan. So the 2 times doubling the standard deduction, veteran retirement relief, small business credits, the rebates, one-time rebates, one-time gas tax relief, and the grocery tax. If you look at that, also, I think it's important to look at what is it that is in the day one bucket. So the cost up front of things that are one and done, we have the capacity for that. And then what is the real long-term implication to our revenue base? If you add up the things that are going to be recurring built into the revenues, it's $1.25 billion to $1.5 billion. I think the headline numbers look they are much bigger, but a lot of that is built into day one funding as opposed to what we do to the long-term revenue stream. The other part, next part, is working on job growth. We are very closely aligned with Secretary Merrick's game plan. We have to change the game here. If you look at any of the statistics that would track our relative performance versus the peer group that has been defined by Governor Youngkin, North Carolina, South Carolina, Georgia, Tennessee, Florida, Texas, I think I got them all, maybe Alabama, but in any of those statistics, we're either number 6 or 7. So back to what we can define as success, I understand we are ranked very high in terms of being a place that is attractive for business, number 1 in several studies. That's great because it shows that we have the foundation that is important, that should work. We don't have the statistics that show that it works because we have not grown jobs in this state over the last 5 years, and if you look back, go back even farther. And so we've got to translate what has been done to make it more attractive, opportunity zones, training, and now go out and win. Because those states they're doing a great job, and they're doing different things. We've got to look at some of those other things. And last is, we've got to improve efficiency and effectiveness. So the new Office of Transformation, Eric Moeller, I don't know if you've met him yet, but I'm incredibly excited about that, some of the specifics he's working on, but the opportunity for us to work with him and identify opportunities that we can better deliver an efficient and effective government and services to our taxpayers. Sorry if I went over, but thank you so much for the time, Madam Chair. I'm happy to answer questions.
Thank you, Mr. Secretary. Are there questions? Senator Peterson, then Senator Sasslaw.
Yeah. Thank you, Mr. Secretary. I do think over the month, not holding have a my own office that would be for 18 years more than those checks, which is good. Here's a little bit more across the family side here. I have 6 tax proposals I've seen from the administration. One is relief on the gas tax, which is the highway maintenance fund, real estate tax, which is low, the grocery tax, which is both local and state, the minimum standard deduction for purchases of pets, state general fund, a one-time rebate with the state general fund, and the tax rate, which is also state general fund. So I've got 6 different tax proposals here coming from different pockets. Do you all have, you're not going to get them 6, to be fair to say. Do you have some type of triage? What's the priority? What is the plan you think is most effective in helping the community?
Yeah, well, thank you for your question. I think we could say we hope to get all 6, and that's going to be my job is to help that happen, and I understand that's a process and that we'll all be talking about, but that is certainly the goal. So I don't want to go through, it's not my place to go through the prioritization. All of them have their They're objectives that are built around the day one game plan and the priorities of the governor. And I acknowledge that we will have different points of view, but those will be resolved over the coming 45 days. Thank you. I do want to add,
Senator Sasslaw was next,
Yep.
and then Senator Deeds.
Yeah, I keep hearing
Oh, and then Mark.
from your administration on how bad we're doing in relationship to North Carolina, South Carolina, Florida, Alabama. Yet, when you look at the statistics and the ranking of best states to do business, and I've talked to the people at Tyson's Corner, the high-tech companies are lining up to get into Northern Virginia. They are not lining up to go to Florida, Alabama, South Carolina, or North Carolina. How do you explain that?
Yeah, well,
Listening to you all, you would think that we are one of the worst states, for business, when in fact, that just simply isn't so.
Yep. I thank you for your question, and I appreciate the challenge. I think it depends on what you look at. I think there's anecdotal stories that could support any argument you want to make, and I think with respect to the overall theme of are we an attractive state, the studies support it. I think it's a CNBC report that looks at what the elements are that are there and talks about great training we do for workers. I think we all have to agree on what are the metrics for success. Because you can look at data, and my data, number one data is what's happening to job growth, which is, are we attracting individuals and are we attracting companies? And I think there's some great stories. Amazon HQ2, unbelievable story. Great win. Everybody wanted that. But at the end of the day, jobs haven't grown. So it's what is, back to metrics of success, those other states, their jobs are growing. We all have our stories, and as you know, I'm from North Carolina, Charlotte. You would be astounded at what's going on in Charlotte and the transformation of a town that was a banking town to become a tech town, Research Triangle. So there's a machine that they have going. They just attracted the Toyota electric car battery plant that's going to be built in a area more in a rural area. So everyone's got stories, but they can support their story with real job growth. And I think that's got to be one of the, if not the top, one of the top metrics we look at.
But how do you explain that, Madam Chairman, that our unemployment rate is as low as it is, one of the lowest in the country?
Yep, it is always a point below where the national average is, and that's great. And where you're looking at that, you'd say, we can't do anymore. We're at now in the zip code of 3%. So it's extremely tight, but we've got 63% participation rate. We had a lot of people on the sidelines not choosing to work yet, and we're not attracting new people to come to the state. So that to me is the measure of success of what we all do is, have we made it a place that people want to come to, individuals and companies? And we can't say that it is, versus all 6 of those states. So I know I understand your point, and it's a great challenge. I just think we've got to look at how we define success.
Senator Deeds.
Sure.
It's been suggested that the governor is going to hold money for school districts that don't follow his instruction on masks in school. I'm just wondering, I'm curious about the authority for his unilateral decision to hold money. We don't have authority.
Yeah, you're out of my swim lane. I just can't give you a good answer on that. I'm sorry. That's better for somebody else. Thank you.
Senator Lucas.
Thank you, Madam Chair. It's good to see you here this morning. It was nice talking to you on the phone, but I also have a question that's kind of in line with what Senator Dees just asked, and that is school divisions across the Commonwealth, including some of the most conservative and rural, have voted to keep the mask mandate in their jurisdiction. So how do you plan to keep the school divisions like Buchanan and Dickerson, who rely heavily on state funding and who do not have the population basis to increase revenue, to keep their schools from going bankrupt?
Are you saying with respect to the mask?
Yes, sir.
Case?
Correct.
Again, honestly, it's just an area that I am not part of the detailed conversations around. I listen and I hear it, but it's not something that I'm part of that discussion at this point. So I honestly not the right person to address that.
Thank you.
Senator Eben, then Senator Locke, then Senator Newman.
Thank you, Madam Chair. Mr. Secretary, welcome.
Thank you.
I was a little confused. I like I saw the presentation. You said we strong in the economy. You said stunning consistency of growth in general fund, low unemployment rate. Yet Governor Justin has repeatedly stated that our economy is in the ditch. And I was wondering if you agree with the characterization of the economy is in the ditch, or are we have a strong economy?
Right. Well, that I can understand how that term can be applied in ways that would might suggest it's inappropriate. But where we're failing is helping the people out of that top 1.5% of corporates and that top 22% of individuals that at the individual level. Life couldn't be better. Your incomes are, your wages are up, your stock market's up, your home value's up. That bottom 54% of individuals that pays 10% of the taxes, life's not so good. That's what he's talking about. Around, as I've heard him say, around the kitchen table, it's not a very pleasant conversation in the face of continued job insecurity, and also in the face of this rising inflation. Their stress is higher than it should be.
Oh, yes, Senator Eben.
Question. I'm saying that I'm successful doing well. So I'm wondering if the different tax relief buckets the governor is proposing, if he might give them to the people who need them the most by supporting affordable or the income tax credit.
Yep. I understand that. That's not the plan. I think that we all know that these tax cuts that are being proposed are far and away most significant to the lower end of our economy, and that's what the driver is of those proposals.
Madam Chair.
Senator Eben.
Yeah, I appreciate it. I'm just looking at the target that people need the most. But I did also ask the governor's office $3.5 billion in budget amendments without securing need for them. Now, if there's a plan for corresponding cuts to pay for those new items, especially the ongoing proposed tax cuts, which will deplete the economy as over time.
Yep. Well, we led with the proposals supporting the day one game plan. So that's what's in the proposal you've seen. Everybody knows we need to deliver a balanced budget. That's a fact of life that we all live with. And there certainly are thoughts on that, and through conversations with all of you and with the House, we'll come to a place that is getting to us to a balanced budget.
Thank you, Chair. Thank you.
Senator Locke, and then Senator Newman.
Thank you.
Thank you.
What is the governor's plan to increase funding for companies, school, and
Yes, thank you for that. I think that my understanding is the responsibility for the construction of schools is more at the local level. It's not state. I know that obviously the whole education program is a top priority for the governor and his game plan. And it's something that is certainly how that all happens is in the discussion, and some of the implications or consequences of some of these cuts, and perspective on how the schools can be supportive.
Yes, Senator Locke.
Yeah, given that public schools have been underfunded for years, in the governor's proposed amendments for his debated economy remarks, he wishes to create charter schools across the country. And how is that going to protect funding from the schools that doesn't need our support?
Right. No, charter schools are obviously a top priority, and Virginia is one of the lowest states in the country with respect to that. Very important to him to create that choice and how it is funded. And I think that how those funds work between the charter schools and the public school system is something to be understood at a local level, what the implications are. And we got to make sure that both can survive and prosper. So that's part of a discussion that will come about as those plans are implemented.
Thank you, sir.
Senator Newman.
Thank you, Madam Chair. Good morning, Secretary Cummings. A couple of things. One, thank you for coming. I think you've been a bit modest with your background. Your background in banking and otherwise is just extraordinary, and we'd love to maybe sometime hear a bit more about that. The other is I do think that it would be very helpful because we can speculate on anecdotes and otherwise, but when you talk about metrics and you look at GDP growth, it's just something that is either real or it's not real, right? And maybe it would be helpful if you can supply us with that information, because I agree with Senator Sasslaw that if you live in 2 counties or 3 counties in this state, man, there's a lot of jobs, right? There really are. But if you live in, maybe some of the others, there really is a lot of opportunity for betterment. And I just know in our area, we just cannot find employment. We can't find employees. It's just extraordinarily difficult right now. So maybe what would be helpful is if you could help us with some of those metrics that you're talking about, because the facts are the facts, and that would be quite helpful, I think.
Thank you. Yeah, I understand in some of the zones, and as we look at, I think that Senator Merrick, 400,000 jobs, that's a big number. I think everybody here acknowledges that's a big goal. She's going to develop a plan, and that's going to have to engage the whole Commonwealth. Northern Virginia is doing great, has a great base of employment, and that's been a easier job to attract talent, but you've got to think about some of the more rural areas down into Southwest Virginia. But we've got great assets, too. You look at the port, the rail system, Richmond as an economy. I think that it's got to be a holistic game plan that we will definitely get after. And next time we come, I'll do a job, add to that thought on what some of the details are around Virginia. Okay?
Thank you, Madam Chair.
Senator McClellan.
Somebody argued that the reason that we have supervisors is that some decisions that needed to be made that were not. For example, in our administration in this way, one is that in response to the next section, the state court has the amount of funding required to support in our schools. They were talking we are discussing construction which are really that often there is going to be increasing as the state moves to put more responsibility on the development. So, but with that, this administration position is more quickly without the state having support with the rates in response to this response.
Yep. Honestly, that's not a topic that I'm familiar with. It hasn't come up, and I'd like to go back and learn more about it, and we could come back to that.
Madam Chair.
Yes. Some is that these critical both work parents and also
Madam Chair, I'm sorry, but the mic system is really horrible this morning. We can barely hear down at this end.
Apparently, it's being worked on, so.
Thank you. We cannot hear.
Is
No, but we still can't hear you. I think it's the mic system.
this better?
Yes.
Let's go.
So I think we all agree that childcare is important both to make sure that workers and parents can work, but it also lays the foundation for education system. And yet some of the childcare system as the current is not sustainable. There's been efforts to study how to find a quality childcare system in a way that doesn't put all of this parents and ways to improve our education system.
Is that the administration looking at this on?
Again, it's a topic that I'm not, have not been well-versed in at this point, so I can't tell you where that stands on the priority list. It's not part of what's been released as a priority game plan at this point in time.
Senator Marsden.
Thank you, Madam Chair. Welcome to state government.
Thank you.
Secretary
Pleasure to be here.
One thing we're good at in Virginia is transitions. We do it every 4 years. And, you have a business community here, lobbyists from corporate, from manufacturing to nonprofits, service sector, all working together. And, state employees are just a critical part of the fact that we transition very successfully here in Virginia. Campaigns are all about pointing out differences. But one of the big things you stated, you were new to public service, but one of the important things in your job and in the governor's is communications to people. Mm-hmm. And to let them know that basically you have been handed a royal flush in terms of finance. And people need to know that it isn't all about the new, it isn't all about new plans. It's also about building on the strengths that we've put together over the administration since I've been here. Governor Warner, Governor Kane, yep. Governor McDonald, and Governors McAuliffe and Northam. And people need to have that confidence that we're building as well as changing. Mm-hmm. At the time in campaigns is to talk about our differences. That's healthy. But once we get into the matter of governing, you have a lot of support in your state workforce and in the people who consistently work in administrations and have that experience and what have you. It's the Virginia way. It's worked very successfully. And I would urge you to, as you communicate to Virginians everywhere, that the fact that we are a successful state, that you are building on our strengths and not just creating new ideas that will take us forward, but it's a combination of the two that make us successful. And so not a question, just a thought. Thank you.
Well, I really appreciate your comment because we all ultimately are on the same team. And we might differ on what it looks like, but we're out to make the Commonwealth a better place for everybody. And we might have different ideas about how to get there, but that's what I'm here to help with.
Thank you, Mr. Secretary. I don't see any other members desiring to speak, so thank you so much for your presentation.
Thank you.
And we all look forward to working with you.
I do too. Thanks so much.
Next on our agenda, we have two bills in front of us, and I would like to remind any patrons who are watching or whose assistants are watching that you can delay just one time. And if you need to go more than one time, you will not be docketed. Okay. So we have, and I don't see either. Okay, and oh, Senator Ruff. Mm-hmm. I am.
Thank you, Madam Chairman. Senate Bill 184. Many of us are concerned about the loss of forest land throughout the Commonwealth. This bill is an attempt to start addressing the issue. It creates a fund, a forest stability fund. The goal in the coming months is to develop the guidelines of how to best move forward with this. We do have folks here from the forest industry who'd like to speak to that.
Yes, this bill was not previously heard in committee, so we will take public comments. Yes, sir.
Thank you, Madam Chair, members of the committee. Corey Connors, Executive Director of the Virginia Forestry Association. Virginia's 16 million acre forest resource is unique in many regards. The economic, environmental, and recreational benefits are very well documented, but perhaps the most unique aspect is that our forest resource is owned 80% by private folks. Landowners incur a considerable cost of ownership as stewards of the forest, insurance, management, and taxes. Land use valuation is an important tool to provide relief for some of those costs between generational harvests. In addition to the mounting development pressure that Senator Ruff mentioned, a growing number of counties in recent years have repealed or considered repeal of their forest land use ordinances. One county's repeal of forest land use this past December created the highest county property tax rate for forest land ownership east of the Mississippi. We need tools that can allow our private landowners to keep forests as forests. And while SB 184 doesn't solve all of these challenges, it represents an important first step to protecting forests from conversion to more intensive and less valuable economic, environmental, and recreational uses. On behalf of the 405,000 individuals and families that own private forest land in the Commonwealth, we ask that you vote yes on SB 184.
Thank you. Is there anyone else speaking in favor?
For those attendees in the Zoom room who would like to speak in favor of the bill, please raise your hand electronically now.
And just to be clear, anybody in the Zoom room who would like to speak, please raise your hand electronically now.
Yes.
Good morning, Madam Chair, members of the committee. Joe Lurch with the Virginia Association of Counties. We support this innovative measure. We have a longstanding policy that provides these incentives for conservation type uses in our counties. So thank you very much.
Thank you. Is there anyone on Zoom?
Madam Chair, your hand is raised at this meeting.
No, there's no one on Zoom. Okay. Is there a discussion of the bill or a motion on the bill? Yes, Senator Peterson.
I've also recommended study taxation statutes 20 years ago. I think this is an innovative one that first is all the
Second.
It's been moved and seconded that Senate Bill 184 be reported. All in favor, please record your vote. Aye. Opposed, no.
Would someone? I assume it's a yes. Ayes 16, no 0.
Ayes 16, no 0. The bill is reported. Is Senator McPike here?
Yes, ma'am.
Thank you. Good. Senate Bill 648.
Yes, Madam Chair. Thank you for the time this morning. Senate Bill 648 allows those localities that have adopted senior or elderly tax relief to simply have rolling enrollment throughout the year versus sort of set whether January 1 through April. So it's up to the local government to set sort of the receiving of the applications throughout the year. That is the bill, and some local government folks had reached out and wanted clarity and the ability to be a little bit more flexible about receiving that elderly and senior tax relief, Madam Chair.
Are there questions for Senator McPike? Senator Norman.
Thank you, Madam Chairman. So do I understand this would be like an open enrollment?
That's right, Madam Chair.
Okay. Madam Chair, second question.
Senator
Would it have a retroactive effect?
I don't know how the application would be if the locality would have to pass an ordinance to update and therefore receive their ongoing, so however they're structured, their ordinance would govern their application timeframe.
Madam Chairman, so it would be up to the discretion of local government to determine if they accepted an open enrollment and the applicability of it.
Madam Chair, that would be my interpretation because it is a local option based on how they structure the ordinance.
Okay, are there further questions? Would anyone like to speak in favor of the bill?
If there's anyone in the Zoom room who would like to speak to this bill, please raise your hand now electronically. Madam Chair, there's no one in the Zoom room with their hands raised.
Is there anyone who'd like to speak in opposition to the bill?
If there's anyone in the Zoom room who would like to speak in opposition to the bill, please raise your hand electronically. Madam Chair, we do have no one to speak in opposition.
Madam Chair.
Yes, Senator Newman.
Jeremy, a lot of times we go through a constitutional amendment. Is there any constitutionality issue that we've kind of identified here that on level taxation that could impact your legislation?
Madam Chair, this is already existing code, so it really has been addressed through sort of the separate clause issues. Council might have the more precise date of when that was addressed, but
Madam Chair, Senator Newman's question is enabling language in the Constitution allows the General Assembly to restrict or limit the exemption from the alternate agency rule. This has to do with a pretty specific procedure for how the person would demonstrate something like their income, their assets, or whether they are disabled. So it wouldn't be expanding the exemption beyond the scope of what's in the Constitution. So the short answer to the question is
Madam Chair, I can't hear very well, but I think he's saying it's okay.
It's okay. Yes, that's what I gathered too. Okay. Is there a motion on the bill?
Move to report.
It's been moved and seconded that Senate Bill 648 be reported. Please record your vote.
I 16, no 0.
I 16, no 0. The bill is reported.
Thank you, Madam Chair.
Senator. That completes our extensive docket for today. We will be back tomorrow.